Hello, good day, guys. My name is Nick, technical analyst for SuperForex. Today, we shall be looking at the technical analysis on the currency pair, the United States dollars to the Japanese yen. And first, we'll be talking about fundamentals before we move right down ahead to technicals, which is purely what we're going to be seeing on the chart. Now, the USD JPY is still expected to remain within the 130.50 to 134.50 consolidated range for the time being, and suggests that UOB Group's economists and market strategies is looking at a 24-hour view. And we highlighted yesterday that the oversold weakness of the USD could extend to 131.50 first before stabilization is likely. And the next support at 131.00 is unlikely to come into view. Our view was not wrong as USD dropped to 131.29 before rebounding, while downward pressure has eased. USD could drift lower today. However, the support of 131.00 is still unlikely to come into view. Resistance is at 132.50 followed by 133.00. Now, in the next 1 to 3 weeks, there's not much to add to our update, but we can see, as highlighted, a sharp drop from last Friday. It's likely the USD with a broad range of 130.50 and 134.50 instead of rebounding further. Now, what to expect from this is maybe a touch to the most recent resistance at 132.622. And this, of course, is nothing less than 70 pips from this entry point, which is good money. Alternatively, we're looking at a decline to break out of the support zone at 131.161 and further downward move to at least the 129.952 zone, which is about 184 pips from our entry point. And that's our technical analysis on today's currency pair, United States dollars to the Japanese yen. Now let's move over to the stock markets. Welcome back, guys. And now today on the stock markets, we'll be having a dig at Apple. Apple Inc. plans to replace a Broadcom ink chip from its devices with an in-house design in 2025. And this has been reported on Monday. While some familiar with the matter, the iPhone maker has been working to limit its reliance on other chip makers, having moved to its own line of chips for recent models of its Mac computers, replacing those from Intel Corp. Apple plans to replace Broadcom's Wi-Fi and Bluetooth chip, according to the Bloomberg News report, which added that Apple is the US chip's largest customer, of course, and the Cupertino, California-based company accounts for about 20% of Broadcom's revenue. And Apple's decision is likely to hit Broadcom revenue by about $1 billion to $1.5 billion. And this, of course, however, should have an effect on the market. However, Broadcom's radio frequency or RF chips are complex to design and manufacture and are likely to be replaced in the short term. Apple is also looking to swap out Qualcomm Inc. cellular modem chips with its own by the end of 2024 or early 2025, according to sources. Now, Qualcomm has said it believes Apple will phase out its chips, while Apple uses Qualcomm's X65 for 5G modem in its iPhone 14 line and is expected to deploy a new version of the same chip in the iPhone 15 models likely to be released later this year. Now, what to expect, this, of course, should spike some move for this commodity. And we're looking at the breakout of the most recent resistance at 133.59 and a push up to a new zone at 142.16 thereabout, but touching 135.80, which is the next resistance point before push up to a further new zone at 141 thereabout. So if we're to make a trade entry at this point and let our trade run up to this point, we're looking out for 58 pips, and an extension, we're looking out nothing less than 108 pips from that entry point, of course, which is good money. And that's our technical analysis on today's stock market, Apple. I'll remain your host, Nick. Bye for now.